We're going to begin this hour, though, with this. President Trump putting pressure on the Federal Reserve after it decided not to cut the interest rates yesterday. He said Fed Chairman Jerome Powell should, quote, do the right thing and reduce rates. Yesterday, Powell told reporters, including our own Kelly O'Grady, that Trump's tariffs on imported goods are helping push up the prices.
Inflation has started to move up now, we think partly in response to tariffs, and there may be a delay in further progress over the course of this year.
So consumer sentiment has dipped dramatically, but you say the economy and the hard data is still solid. What is your message to consumers that clearly disagree and don't feel that strength? Because the hard data they're looking at is their grocery bill.
The grocery bill is about past inflation, really. There was inflation in 21, 2, and 3, and prices went up. The current level, it's not the change in prices, it's they're unhappy, and they're not wrong to be unhappy that prices went up quite a bit, and they're paying a lot for those things.
And we're happy to say that Kelly O'Grady joins us at the table. Always good to see you. Do you think the Fed will actually follow up on the president's advice? They'll do that?
So, look, Chair Powell has made it very clear that the Federal Reserve and the White House is separate, and he absolutely expects to continue that way. I think what really stood out to me, though, was the fact that Powell was actually willing to talk about tariffs this time. You know, he really has pushed that off, and he even said that this could impact their fight against inflation. And yet, I was pouring through the economic projections. They're still expecting 2 interest rate cuts this year. So I pressed him in another question, and I said, you know, why? Are you more concerned about maybe an economic slowdown in growth and higher prices? And he said, no, things are so uncertain. But I mean, we've all talked about this before. That's what retailers are worried about, that this negative consumer sentiment ends up making people spend less.
So that's all the macro stuff for people sitting at home wondering about their pocketbook, their bills, their kitchen table. Just bottom line it for it. What are the takeaways for the average person?
So we are not getting an interest rate cut anytime soon, it seems like. So if you're looking for a big purchase, probably you're going to have to keep that off for a bit. Also, interest rates are indirectly tied to mortgage rates. Car loans, we're likely not going to see that go down to, I think, the magical 3% number on mortgage rates that people are looking for. But we will see how tariffs, inflation, all of that plays out. And they're going to meet again in May.
I thought it was interesting you said it stood out to you that he was talking about tariffs. Why do you think he was so chatty yesterday? Chattier than normal?
Well,
briefly, what's your thought?
Because now the administration has actually implemented some of these, and he's seeing the impact, whereas before he just didn't want to speculate.
Gotcha.
Kelly O'Grady, always good
Kelly.
to have you here.